Hey everybody, Artwood Mortgage Team, your favorite mortgage guy. If you didn't know, just ask me, I will tell you. I want to talk a little bit about ups and downs today. And what do I mean by that? Well, we have ups and downs in life, period. But this is going to be about record amounts of equity in the housing market and with homeowners today. And down is how low those first mortgage rates were when you got them in 2020 and 2021. Yes, now 2022, the latter half of 2022, 23, 24, 25. They've been a lot higher. But what happens is all of a sudden you got hundreds of thousands of dollars in equity. Your equity's up, your first mortgage rate's down, and you have a need to access that cash. And you really don't want to get rid of that beautiful 3%, 2.5%, 1.99, 2.5, whatever it is. You don't want to get rid of that. But it's like, all right, so we owe $200,000, $300,000 on our house. Our house is worth $600,000, $700,000. And maybe we want to tap that to, I don't know, buy another house, buy a second home, or we want to tap that equity to do renovations around the house, build, renovate, whatever, fix, or you've got some high interest debt that you need to pay off. So those are things that you go, gosh, I'd really like to do it, but I really don't want to get rid of that 3% interest rate. Well, the good news is there's second mortgage rates. And one of the things that I look at determining between whether somebody needs to do a first mortgage or whether they need to do a second mortgage is a blended rate. So a blended rate be, hey, by the way, your second mortgage is going to be 8%. Your first mortgage is going to be at 2%. You know, 75% of the mortgage, first mortgage is, anyway, you can't, it's more complicated math than I can get into here, but it's like, hey, your blended rate's 4% if you could take out an 8% second. So that's better than you could get on a first. So we do a second mortgage. So yeah, you always have to just look at just the different ways that you can attack getting that cash out. Because the other thing you look at on a cash out situation, you got $50,000 in credit card bills, car payments, student loans, whatever else it is, and you got $50,000. It's costing you $1,000 a month, to pay that stuff off. Well, if you get an equity line or a fixed rate second mortgage, which I'm a big proponent of the fixed rate second mortgages, that payment may only be $400. Well, then you can look at making some real movements on getting all that stuff paid off. One of the things when I made the move to Illuminate is the resources that we have for second mortgages. So we've got bank statement programs. We can go up, not necessarily on bank statement, but we can go up to 90%. We have fixed rates. I'm actually doing a 1099 second mortgage right now. And, it's, you get somebody that maybe has their tax bills coming due and it's $30,000, $40,000 or whatever, and they don't have that money. They can go on an IRS tax plan, or they can pull out a second mortgage. So for me to get into it a ton on here, I'd love for you to comment below, DM me, email me, whatever you want to do. Call me, 404-909-3567. But we can take a look at how much can you get out? Can you get out what you need? What's the scenario? What's the blended rate? What's the best case scenario for it? What's the best type of second mortgage? So there's just a lot to be talked about, and I can't do it all on here, but would love to help you turn your mortgage into a work of art. Your mortgage into a work of art. Have a great day.